Good morning everybody, and this is your Dow Jones day trade setup for today. So yesterday was a fairly rough day to the downside, and I think one of the key things that you need to bear in mind here is that we have, so it depends how you draw it, but this is a channel break. There was the first line of the channel. That is a fairly decent break below the channel. So we broke above the channel, it was a fake out, and remember what I said to you, is only a 25% chance of that continuing to the upside, and we've kind of broken to the downside. So trend is still up at the moment. We are definitely not in bear mode. This is a nice healthy pullback at the moment, and it would be nice to see a little bit more of a pullback. So I'm just getting some levels drawn in here quickly. So the first level for me for a decent pullback is going to be 29,195, and then secondly down to 28,400. So that would give me a fairly decent pullback, and it will also break the structure and start building, allowing us to build new structure. So at the moment, I just need to wait for charts, and so at the moment what we're looking for is a rejection higher up. So I'm looking for price to climb, and then I'm looking for it to reject a level just to confirm that this trend, that this channel break is valid, and that area is going to be up here at 30,557 or 30,550. If we reject that area, then I'm definitely looking for more shorts further to the downside. But the trend is up, guys. Don't get me wrong. This is not an opportunity that the market is going to fall. And if you look at the daily, look at my oscillators, they were grouped to the upside pretty much to this channel, which is always a warning. We've broken the channel, so the logical move is down to 29,195. You can see there's a daily swing high there, but the way that the oscillators are separating at the moment, they are moving into a position which is going to sort of potentially turn far apart. It's still a couple of days away. I just want to see if there's a daily one here. Not really. But basically, when they're far apart like this, and the one turns at the bottom and the one turns close to the upside, there's normally another big move coming to the upside. So the tech stocks had some great results. So they really had some great results yesterday, but they were hammered. So, what is the fear? The fear is about data, and the fear is about how these tech stocks use your data, and how they market to you based on the data that they've collected. The reality is they've been doing it for years, and now that we all we've woken up, now we want to scream and shout and push against it. But the reality is they've been doing it for years. So yeah, probably a storm in the teacup as far as I'm concerned. You're probably going to find people are just going to eventually forget about it and move on with life. But until that point, I think healthy pullbacks are needed, especially on the NASDAQ stocks. There are stocks there that need a fairly decent pullback so that we can get some structure built. So anyway, that is me at the moment, kind of sitting on hands because there are two pretty key levels here. And I'm just going to come to the 15-minute for this. So this area here, 30,400 is fairly key, and 30,550 is another key level. So that's what I want to see. If we reject one of these levels and we reject it properly, then we should see some movement to the downside. But you can see how this has gone parabolic, and we've broken the parabolic curve here. So the curve is down there, we've broken up, forming a bit of a wedge. So I suspect another move to the upside, and that move would probably be straight back onto the structure. Now, the other thing that you need to look out for is what kind of gaps are there to the upside, and I think there's pretty much only one, which is in this area here. Well, two. There's one there, there's one there. So that makes sense. Pull back into 30,550 or 30,560. If we reject that area, then there is definitely an opportunity for a short from around here. And you've got 169 point stop loss, so keep your position relatively small, and then sort of try and ride this back down to the downside. I'm not really wanting to jump in short just yet, but definitely we'll look at that moving forward today. So we'll just have a look and see what transpires during the European session. But anyway, that's my view at the moment. Still more results coming out today. We've got data coming out. We've got jobs numbers coming out today. So still quite a bit of chaos to happen. And we've still got the stimulus package fight that is also ongoing at the moment right now. So yeah, it's exciting times. I think, I do believe we need a little bit more of a pullback before we start climbing back in for the long side. So whatever shorts you are taking, they are scalps. Let me repeat that, they are scalps. So keep your stops tight, take profit. Wherever you see a level, take profit. Wait for the next setup, get in short, move down. Okay, exactly what we've been doing, moving up into the strong area of resistance wall, sort of the ranging top. Buy the bottoms, take profit at the top. Buy the bottoms, take profit at the top. But you need that reverse trend now. So do it the opposite way. Hope I'm making sense. So wait for the pullback, jump in short. Make sure you've got a really tight stop loss and you've got an area where it looks and it makes sense. Ride it to the level, take your profit. Wait for the next setup. As soon as you start breaking structure to the upside, reverse your decision, because then we need to be looking for the longs to go long. If you're uncomfortable with that, like I am, then just wait for the long setup. It's the safest and less stress, the most stress-free option. Okay. Anyway, that's it for me today. I hope it helps. Don't forget to like and subscribe. Got any comments? Drop us some comments. Do appreciate all the input. And we'll catch up with you bright and breezy tomorrow morning. Cheers for now.